Zacks equity strategist Shaun Pruitt here. Today, I'm going to be discussing 3 highly ranked gold stocks to buy on the dip. So the 3 highly ranked gold stocks I'm referring to are ticker symbol AEM, EQX, and HMY. So with the US and China striking a trade deal on Monday, the price of gold has dipped from its historic highs of over $3,400 an ounce. And although investor sentiment is turning bullish on optimism that a global recession can be avoided, gold stocks have been a pleasant hedge against market volatility, as the commodity tends to hold its value or even appreciate during economic uncertainty, unlike currencies. And also several gold stocks have made their way onto the coveted Zacks ranked #1 strong buy list, as they're benefiting from the commodity's historic peak. And here you can see how gold prices have kind of skyrocketed this year to historic highs right here, about 3,200 right now. We're at 3,400. So first up is Agnico Eagle Mines, ticker symbol AEM. And the stock price is at $106 right now. So Agnico Eagle Mines is a stock I actually found myself covering quite a bit last year. And there haven't been too many opportunities to buy Agnico Eagle Mines on the dip. It's stock on the dip in recent years. And it operates one of Canada's largest gold mines in terms of gold reserves. So this makes this 10% dip very intriguing, as AEM has still soared over 30% year to date. And it's up 100% in the last 3 years, as you can see here. So Agnico's stellar EPS growth has kept investors engaged as one of the premier gold producers. It produced over 3 million ounces of gold in 2024, with gold reserves or net production totaling 1.27 million tons. And next up is Equinox Gold, ticker symbol EQX. And this is a very intriguing stock as well, because it's almost at penny stock status at about $6. I think it dipped below $6 today. So Equinox Gold is hard to overlook, as its valuation also attests to the notion that its stock is cheap as well. And the company's growth makes the risk to reward very favorable, with Equinox being engaged in the acquisition, exploration, and the development of mineral deposits, including gold, copper, and silver. So like Agnico Eagle Mines is also headquartered in Canada. And Equinox principal properties include the Orizona gold mine in Brazil and the Mesquite gold mine in California. And what's really intriguing about Equinox Gold stock is that at $6, it is expecting high double-digit top and bottom line growth for the foreseeable future. And it trades at just 6 times forward earnings and under the optimum level of less than 2 times sales. And the cherry on top here is that earnings estimate revisions have spiked in the last 30 days, as you can see right here. And EQX is projected, its EPS is projected to skyrocket 400% this year, and another 24% in fiscal year 26 to $1.26 per share. So pretty impressive for a stock that's trading around $6. And this is also accompanied by expectations of more than 35% sales growth in fiscal year 25 and fiscal year 26. And those projections are edging toward $3 billion in annual sales. So again, here you can see that very positive trend of earnings estimate revisions actually over the last 30 days. So fiscal year 25 F1 is up almost 15%, and fiscal year 26 F2 is up over 20%. And last but not least is Harmony Gold, ticker symbol HMY. So this stock price is trading under $15 a share, about $14 right now. And this is actually South Africa's biggest gold miner. It specializes in both underground and surface gold mining. And like Agnico Eagle Mines, buying Harmony stock on the dip could be very lucrative, as HMY has actually more than tripled in the last 3 years and is sitting on gains of nearly 300% during this period. And HMY is up 70% year to date, but has also dropped a little bit over 10% in May. So this pullback could be very advantageous, as Harmony has outperformed many of its competitors thanks to its improved operational performance. It's increased production while reducing costs. And it's also made key strategic investments in new mining projects, including the open pit gold and silver Hidden Valley mine in New Guinea, Melanesia. So it's also noteworthy that during Q1, Harmony achieved a record in operating free cash flow at $579 million and provided a record interim dividend payout to its shareholders at about $78 million. And its current annual dividend yield is at 1.36%, which you can see right here. And also take a look at its analyzed dividend growth rate over the last 5 years is actually around 7%. And it's also increased its dividend each time in the last 5 years. So that's something that's very intriguing for a stock that's trading under $15 a share. So the bottom line is these highly ranked gold stocks are starting to present the buy the dip opportunity that investors may have been waiting for. And most importantly, they should still be able to benefit from a historic surge in gold prices, even as improved relations between the U.S. and its trading partners brings more stability to the broader market. Again, I'm Zacks equity strategist Shaun Pruitt. I hope you enjoyed this content. For more of our promotions, please feel free to visit zacks.com/promo.